Hello, everyone, and let's start today's news with numbers. Important numbers coming up next week, next Friday to be exact, and that is the non-farm payroll numbers or unemployment, and that will be the report for August. Remember, we want an unemployment number that is either in line or slightly softer than expected. We don't want a devastating number for people to panic and basically sell everything because the economy is in turmoil, which it isn't. But we also don't want one that's really strong, showing that the economy is stronger than ever, because although logically that would be good for crypto, that means the Fed might hold off on interest rate cuts, and everyone in the crypto market wants interest rate cuts. So we want somewhere in the middle, maybe leaning slightly softer. Remember, last month's soft numbers combined with the Japanese thing caused crypto to go down, but it came back up very, very quickly within a week. However, this time we won't have the Japanese thing, so there's no way we're actually going to dip that much. It'll just be the Fed numbers, and if they're soft or way too soft, we will dip a couple thousand points and then come back up. And if they are soft, the Fed might actually be better off for us in the long run because they'll cut 50 instead of 25. Right now, we are projected for a 25 basis point cut, and a lot of market participants are hoping for 50. I think that's why it's not so bullish right now. If they were actually projecting 50 basis point cut, I think we would be a lot more bullish right now. But Jerome Powell is a very cautious man. He knows the economy isn't really in turmoil or anything. It's just fine. So he wants to slowly ease us back to the neutral rate of about 2% to 2.5%. So he's going to cut it one step at a time, probably one in September and one in November. I expect the unemployment numbers to be about even, maybe slightly softer. And I think that's what the market is actually looking for. Well, that's what Jerome Powell is looking for. I think some people are wanting really, really bad numbers, so he'll cut 50 basis points. And while that might get us to the bull run quicker, that also could just basically have the effect of a big sell-off as well, because people are afraid that the economy is crashing, which it's not at this point. So based on the state of the economy right now, I don't think the non-farm payrolls report for August that's coming out on Friday, September 6th will be that bad, but it also won't be as brilliant as the reports were for the first half of the year, because the first half of the year, the numbers were a little too good, and that's why we've delayed rate cuts for so long. And of course, regardless of how much we dump, we're not going to dump nearly as much as last month, because remember, we don't actually have the Japanese fiasco coming in. Japan has said they won't raise rates for a long time because they don't want their economy to commit seppuku, and that would be really, really bad, because despite the fact that America got hurt really badly, Japan got hurt even worse. And if you really look at the American economy, the stock markets and the NASDAQ have recovered. Crypto hasn't recovered, but crypto isn't really following the stock markets right now. I still think there is a risk-adverse option for crypto for some reason, and we're waiting for those interest rates to come down before people will switch from the risk-off assets to the risk-on assets. But that'll take over the course of a couple of years, because even a 0.25 basis cut, that's going to get the ball rolling and get some of the long-term ones to start coming down. But, those bonds are going to be attractive until they fall to the 3% range, which might definitely take a while. Look for the 2-year bonds to get to 3%. And then that's when I think the mindset will shift, and bonds will no longer be as attractive, and crypto will be more attractive than bonds. But we got a long way to go for that. Of course, that's going to affect the price of long purchase items like homes and cars. But we want that rate to come down so the bonds aren't attractive, so that money will flow into crypto. So there's an infinite money glitch with ATMs. Yes, it's basically Chase. And that left some TikTokers in some huge debt. So users on social media have been reporting a glitch. Man, I want some of that infinite money glitch. I could use infinite amounts of money with Chase Bank ATMs that allowed them to withdraw large sums without having sufficient funds in their accounts. But that basically has overdrawn. Now, if the ATMs actually KYC AML you, which I'm pretty sure most ATMs do because you have to use your debit card to do it, you end up owing a lot of money. And I doubt they'll let you off on this one by declaring bankruptcy. So you're technically allowed to withdraw infinite amounts of money, but that actually goes onto your account and you have infinite amounts of debt. And infinite amounts of debt is really hard to get out from if you didn't know. A viral TikTok trend known as the infinite money glitch, purportedly allowing users to withdraw large sums from Chase Bank's ATMs, has apparently resulted in a large debt and frozen accounts for those who tried it. So basically, like, not only do you get a large debt, but your account is frozen and you can't really do anything about it. So even if you see this glitch, don't use it, because I'm sure like you'll get tracked down and the feds will come after you, because if you withdraw millions of dollars and then just be like suckers, and then they like close and basically like never do anything about your account, the bad guys in suits will come after you. Users on social media were posting themselves supposedly taking advantage of the glitch by depositing fake checks, and before they cleared, withdrawing money despite having insufficient funds in their accounts. So they, like when you deposit a check, it takes a day or two for it to clear. Well, they didn't wait for that to clear. The money that was pending, they just immediately withdrew it. But that actually runs afoul of the law, because they know exactly who you are. See, people, when they do this crap, they don't really think about it in their head. They're like, oh, I can get hundreds or thousands of dollars for free. But no, folks, it's not free, because the law enforcement agencies know where you are and know who you are, and they can just close down your accounts and you'll have to pay back that debt. So basically, like cashing hot checks and then withdrawing the money before they're cashed, not a good idea if you want to avoid the slammer. And I think a lot of people are going to be going to prison over this because, they're dumb and they thought they could actually pull one over on the big bad banks, which they aren't going to be able to because, everything's KYC AML. Now, if this was crypto, it'd be much harder for them to track. But since it's not crypto, yeah, you're not getting away with this. So someone posted, so there is a Chase Bank money glitch right now where it approves people for high loans and deposits it in their account. Some have been successful, but some are going into massive debt after they withdraw the funds. Yeah, it's not worth like going on a spending spree. It really not worth it going on a spending spree and then coming into massive debt. And having like a balance of like negative $100,000 on your account, which some people are actually doing. And I feel like if you cash a check that is going to bounce and then you withdraw the money from it, I 100% feel like that's some kind of fraud. I'm not exactly sure what, but I have a feeling that's completely some kind of fraud. So the Chase unlimited money glitch that went viral on TikTok was write yourself a giant check, mobile depositing that check, going to an ATM to withdraw cash before check cleared, literally just committing check fraud. And yeah, people aren't thinking this through. Why would you commit check fraud when they know exactly who you are? Because you're writing a check to yourself. They already, like, just by the name on the check, they know who you are and like the name of the person writing a check. So I feel like a lot of people are just gonna like go to jail. So yesterday, open source intel said yesterday, a glitch in Chase Bank system allowed people to withdraw funds they weren't entitled to, prompting the bank to place 7-day holds on the affected account. As a consequence, Chase account holders who participated in this glitch are completely screwed. And you can actually see this right here on the Twitter post that, a bunch of guys are laughing. And then he's like, oh, dang it. Now I have like a negative balance of $31,000 on your account. Yeah, guys, don't be dumb. Remember, your bank account and details are all KYC AML'd. And if you basically like write yourself a check to cash it like before you're able to, you are committing bank fraud. You're going to end up with negative money, which is not good. And the feds might come to your house. So the Chase unlimited money glitch that went viral on TikTok was writing yourself a giant check, mobile depositing the check, going to an ATM to withdraw cash before the check cleared, and basically committing bank fraud. So this was a very interesting glitch, but don't take advantage of it, even if you find something like this, because you will actually pay for it. So Chase was pretty on top of it. Within a day, it was all fixed, and the people that were doing this were seeing big holes in their accounts or huge negative balances. So yeah, didn't work out for the people that actually just committed check fraud. Third, whales are actually still hoarding Bitcoin, and wallets with 100 or more hit 17-month high. Bitcoin whales have been increasingly active lately, gobbling up more crypto as smaller traders feel the pressure and sell their holdings. The number of Bitcoin wallets holding 100 BTC or more has just hit a 17-month high after a surge in holding over the past month. Data shared by blockchain analytics platform Sentiment in August 31st X post shows over 283 wallets managed to cross the 100 Bitcoin mark in August. As crypto prices have let retail traders down, Bitcoin whales are growing in number. They know this is going up, so they're definitely buying more and more. And we are hitting a 17-month high, and I still think they're accumulating right now. There are now 16,120 such wallets on the network that have broken a 17-month high. Still, like, not really near the places where we were in the last bull run, so we still have a way to go. But at this point, no, it is time for prices to actually go up. So basically, in the same period, Santander reported that wallets with at least 10 Bitcoin, known as sharks, have also been increasing their holdings. So both the whales and the sharks have been increasing their holdings. So you as guppies should also be increasing your holdings. A lot of the smaller traders are exiting, but that means like the whales can sooner or later pump the price up and actually benefit from it, because they're the ones that are holding all your coins right now, and there's no reason for them to not pump it up after a while. So like, I do speculate that in a month or two, after a little bit more accumulation from the whales, the prices will go up by manipulation, and the whales and the sharks are going to be the only ones that actually make money, while the guppies and the minnows cry because they sold way too fast. Of course, the crypto fear and greed index is at extreme fear at this point, and I think we're kind of like getting to the bottom of that point. Like, we were kind of like semi-euphoric back like earlier this year in March and April, but we're not euphoric anymore. Obviously, people have kind of like given up on the entire thing at this point, and I think they're giving up way too early. I also want to talk about, like, are crypto hacks actually hurting performance, crypto performance? Now, this comes as August crypto losses exceeded 313 million. So if you extrapolate that over 12 months, I actually think August might have been one of the off months, honestly. So like, that's about $4 billion per year in crypto losses. And most of that $4 billion might actually just be sold in the spot market, because, if hackers can, they get that money and they basically go to the exchanges and sell it for cash, because, they want to be able to just take that money out before it's frozen or anything. So there's probably a significant amount of money coming out because of hacks. Now, so that's one reason it could be very negative, just the pure reason that hackers will sell all the crypto on the open market, and that will bring crypto prices down. But of course, there is another reason, and that's trust within the crypto market. We see a lot of these big hacks and cracks, like every week or every other week, or even every other day. Now, a lot of people are saying like banking does the same thing. It actually doesn't. Yes, you hear about banking scams every so often, but it's like, ooh, oh my God, this like happened in banking, like the bank lost millions of dollars or something like that. I hear about that like once every year or two, maybe once every half a year, depending on like if it's a small or big bank. Whereas crypto, I hear about it every other day and everyone's like, meh, whatever. So I think that is actually like hurting crypto by not having as many people come in. Now, I'm sure like a lot of the degen traders will actually come in once, once basically like the market heats up. But I think some of the mainstream people that would actually come in would actually be scared off, especially by like, smaller coins or altcoins. And that's going to hurt some of the better alt projects. I mean, the meme market's the meme market. I don't know how much the meme market will actually be affected by this. My guess is the meme market's probably not going to be affected by this at all, because meme traders will brave all this stuff. But the people that actually want to buy like good, solid projects, they're going to look at the crypto market, see all these like scams, and they're going to be afraid that they're going to buy a scam. So, I mean, I think this really hurts the crypto market in terms of like getting new investors in, but also just the pure selling by hackers. And this is why we need to change the culture of like, instead of paying like or giving into black hat hacker demands, like white hat hackers are different. They're fine because that's like a negotiated truce. It's basically like, hey, you help us find the bugs and then we'll pay you. That's perfectly fine. But black hat hackers that basically take things hostage and demand a ransom, they should actually have the ninjas sent after them, because that is very, very bad for the industry. Obviously, people who do fraud, who like just straight up steal money, should actually have the ninjas sent after them too. We got to be serious about this if we want more people entering the market, if we really want, not only Bitcoin, but other cryptos to have more global adoption. We got to inspire more confidence. I do think like part of the reason, I mean, maybe not the main reason, obviously, that we're kind of like stuck in the middle price, especially for like some of the alts. I do feel like, a lot of these rug pulls, but also like just the hacks and stolen coins, they do actually play a part, especially in the smaller coins, because they don't have much liquidity. Like one hack, someone steals $5 million of the coin, sells it almost all at once on exchange, that could tank the coin. But even for bigger coins, someone steals like $100 million or something, and then they try to distribute it via, like mixers or whatever into like the various exchanges, and that could definitely sell it down. And although like a lot of the exchanges block this stuff, they can't block all of it. And a couple $100 million selling very fast, that will force even some of the bigger coins down as well. So I think it does actually hurt crypto more than we actually think. One, by shaking the confidence of would-be crypto investors, and two, because just the pure selling of it, like $300 million per month, that's like $4 billion a year. And that's like pure selling on the spot market. And that definitely hurts. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.